Ladies and gentlemen, good day and welcome to the India Pesticides Q3 FY26 earnings conference call hosted by Daulat Capital Markets Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Viral Shah from Daulat Capital. Thank you, and over to you, sir.
Thank you, Shubham. Good evening, everyone. On behalf of Daulat Capital, I would like to thank the management of India Pesticides Ltd for giving us the opportunity to host their Q3 and 9 months FY26 earnings conference call. From the management team, we have with us Mr. D.K. Jain, Chief Executive Officer, Mr. S.P. Gupta, Chief Financial Officer. Without further ado, I would like to hand over the call to the management for their opening remarks, post which we will open the forum for the Q&A session. Thank you, and over to you, sir.
Thank you, Viralji. I am D.K. Jain. Good afternoon, ladies and gentlemen. I take this pleasure in welcome you all to the Q3 FY26 earnings conference call of India Pesticides Ltd. Let me begin with an update on the industry scenario. The global agrochemical market continues to exhibit signs of steady growth, while the sector is still navigating through the effects of global supply chain disruptions and inflationary pressures on raw materials. We have seen a gradual recovery in demand, particularly in our key export markets. Domestically, while the delayed monsoon posed challenges, we have seen resilience in our core segments, especially herbicides and their intermediates, which are helping to mitigate the impact of domestic headwinds. A key highlight in the Union Budget 2026-27 is the continued focus on enhancing the agricultural ecosystem, with increased allocation towards soil health management and organic farming. These initiatives underscore the government's commitment to improving rural infrastructure and promoting sustainable farming practices, which bodes well for the agrochemical industry as well in the long term. Let me begin by sharing that our company has delivered a strong performance for the 9 months ended December 25, reflecting both growth momentum and operating discipline. For the 9-month period, revenue stood at approximately 808 crore compared to 633 crore in the corresponding period last year, representing a growth of nearly 27.6% YOY. More importantly, net profit for the 9 months grew to approximately 89 crores from 62 crore last year, reflecting a strong 44% YOY growth. This demonstrates operating leverage expansion and improved cost efficiency. Friends, for this quarter also, we recorded a 31% YOY growth. This outcome demonstrates our consistent focus on disciplined execution and value creation. Our export sales have showed a robust increase of 28%, driven by good demand in Europe and Australia, while domestic sales increased 33%. The continued strength in our export performance highlights the success of our ongoing international expansion efforts. Our capacity expansion initiatives are progressing as planned, marking a milestone in our efforts to strengthen production capabilities. The initiatives will further support our margin expansion, keeping us firmly on track with our long-term growth objectives. Our R&D-driven approach continues to be the core of our strategy. On the CDMO front, we have projects underway with customers from Japan, USA, and Australia. These engagements will strengthen our positioning as a reliable, compliance-driven manufacturing partner for global innovators. We have one fungicide technical product progressing well, expected to contribute approximately 50 crores in revenue. At our Shalvis facility, commercial production of technical products has commenced. We expect Shalvis to contribute approximately 80 to 100 crore in the revenue in the next financial year, marking a meaningful scale-up in our technical capabilities. Additionally, our PEDA, an intermediate for pedilachlor plant, has now been commissioned with expanded capacity and strengthening backward integration. This enhances supply assurance and improves our cost competitiveness. On the sustainability front, we have made significant contribution in enhancing our renewable energy capabilities. We have successfully begun receiving a 6 megawatt of solar power supply at our Sandila unit from a group captive solar plant. This is a major step in strengthening our renewable energy portfolio and reducing our reliance on conventional power sources. This initiative reflects our commitment to integrating sustainable practices into our operations and further aligns with our global standards for environmental responsibility. We are also actively optimizing process chemistry and product technology to structurally improve yields, reduce input cost, and enhance energy efficiency. Our objective is not short-term pricing advantage, but long-term cost competitiveness against global manufacturers. From a capital allocation perspective, we remain disciplined. Capacity expansion is phased and aligned with visible demand. Looking ahead, in line with promoters' vision to achieve 3,000 crore in 5 years, we have defined clear internal milestones across product expansion, CDMO scale-up, and operational efficiency. We remain confident in our strategy and committed to delivering sustainable, profitable growth. Thank you very much. I now invite our CFO, Mr. S.P. Gupta, to take you through the financial details for the quarter. Mr. Gupta.
Thank you, sir. Good afternoon, ladies and gentlemen. Thank you for joining the India Pesticides Ltd conference call to discuss Q3 and 9 months FY2026 results. Let me take you through the financial highlight for the quarter and 9 months. For Q3 FY2026, total revenue was 229 crore with a 31% increase over 175 crore in Q3 FY25. EBITDA was 41 crore, up 39.7% YOY, with margins increasing to 18% from 17%. Net profit reached 23 crore, up 41%, with PAT margin of 10%. The margin improvement was driven by better operating leverage and ongoing cost efficiencies. Employee benefit expenses included 0.6 crore provision on account of wage code implementation. For the 9 months FY26, total revenue was 808 crore with an increase of 28% as compared to 633 crore in 9 months FY25. EBITDA increased to 149 crore, an increase of 48%, supported by higher gross profit and improved operating efficiency. Net profit for 9 months FY26 was 89 crore, an increase of 44%. On the geographical mix, export revenue increased to 96 crore from 75 crore in Q3 FY25. Domestic revenue was 130 crore, supported by higher demand for herbicide and their intermediates. In terms of revenue mix, technical and API accounted for 73% and formulation balanced 27% in Q3 FY26. Export contributed 42%, while domestic sales made up 58%, showing a balanced market presence. For the 9-month period, domestic market contributed 467 crore and the remaining 324 crore was contributed by international market. We remain focused to driving sustained growth and creating long-term value. We will continue to enhance our product mix while improving our operational efficiencies and optimizing costs across all levels of the business. India Pesticides Ltd has a strong balance sheet with the ability to generate good free cash flow. Our company is planning to fuel its capex plan mostly with internal accruals. Our continued focus on innovation will see the regular introduction of new molecules developed through our in-house R&D, ensuring that we remain at the forefront of industry. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Manish Badani from 360 ONE Capital. Please go ahead.
Thanks for an opportunity, sir. Sir, as you mentioned on the slide number 4, that there is some softening in the certain molecules, like prices. So which are these molecules? And the second question is, that can you just share, like, geography-wise, revenue breakup for the exports? And what is the capacity utilization in the third quarter and the 9 months of FY26? That's it.
Yes, the capacity utilization for 9 months is around 65%. As far as geography-wise revenue is concerned, we are our most highest contribution is from European Union, followed by Australia.
Okay, and you also mentioned that there is a price softening in the certain molecules. So which are these molecules?
No, we have not mentioned price softening. Actually, we have more than 20 technical products. In very few products, there was softening due to some competition from China. But overall, realization were stable.
Okay. And my second question is on, we have the product PEDA. So how much PEDA contributed to the third quarter sales, and what is the utilization rate for the same product?
PEDA and Petlachlor combined, they will be contributing around 50 to 60 crore this quarter.
And utilization rates?
Utilization, we have expanded capacity becomes operational in this month only. So the utilization was, existing capacity utilization was more than 80%.
Okay, got it. Thank you, sir. That's so much.
Thank you. The next question comes from the line of Vidisha from CR Kothari. Please go ahead.
Hello, sir. I wanted you to throw some light on Shalvis. So currently there are 2 blocks operational, and from that you're expecting 100 CR of revenue in FY27. Is that correct?
Madam, Shalvis, 1 block is operational now. Second block is under construction, which we expect to be ready by maybe August, September. But these 2 blocks will contribute 80 to 100 crores in next year.
Okay, and may I know which are these products?
Here we have one block is dedicated to insecticide and 1 block is dedicated to herbicides.
Okay, and sir, what about the coming blocks? How many blocks are coming up, and what will be the revenue potential and production in those?
Yeah. We will be putting up 2 to 3 blocks every year for the coming 3 to 4 years. We can accommodate around 10 blocks there easily. And what we feel that at the end of 5 years, we should be able to achieve a revenue of about 1,000 crores.
1,000 CR from 10 blocks.
Yes.
Okay, and what will the products in the upcoming blocks be? Will it be a new product?
There will be fungicide, herbicide, some specialty products like that. We have lined up few products already, and the work is going on that.
All right. So, sir, what is the expected capex in the next 2 years?
Capex, madam, next year we are not yet finalized, but it will be around 80 to 100 crores for Shalvis and about 25 to 30 crores at our Sandila unit.
All right. Thank you, sir.
Yeah.
All the best.
Thank you. The next question comes from the line of Vishwendra Singh from Prudent Equity. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yeah.
Sir, I wanted to ask that for the last 2 quarters, we have been paying somewhere around 30 to 33% tax rate. So, any comment on this? And do you see similar tax rate, or are we going back to original 25-26%?
This tax expenses include some deferred tax. Otherwise, our tax rate is 22% plus 10% surcharge, around 25% only. This includes some provision for deferred tax, current 9 months.
Okay, so for the full year, we should be going back to the original rate.
Yes, sir.
Okay, okay. And also on the technical capex, are we on track for the commissioning in Q4 that we would be increasing to 30,000 metric ton capacity?
30,000 ton metric capacity we will not achieve this month, sir. We will be achieving it. Presently it is 28.2 and another 1,000 tons we will be ready by this in this quarter next month. So it will be around 29 point something.
Okay, so majority of the 30,000 will be utilized in next year.
Yeah, of course.
Okay, sir. Just quick question on the capex part you mentioned for the Shalvis for the 80 to 100 crore. All will be from internal accrual?
We will be taking some small loans, say 25 to 30 crore, when balance will be funded by India Pesticides Ltd.
Okay, okay. Just last question. You received the formulation for the fungicide formulation registration in Australia. So any incremental revenue for Q4 and next year? So any quantum on that?
Yeah. We will be getting increased revenue on this account. Not only from that, we have received few more registrations in Europe as well as one in New Zealand. So these will contribute to our overall revenue.
Okay. Any ballpark numbers are available?
Ballpark number is difficult to tell at presently. We are still negotiating the technical situation. So maybe at least with these two registrations in New Zealand and Australia, we should get at least 10 to 15 crores.
Okay. Okay, sir. Thank you.
Thank you. The next question comes from the line of Ajay Desai from Sri Jayant Enterprises. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
Good afternoon. Yeah, very much, sir.
Sir, congratulations on good set of numbers. Now, the only question remains, when these numbers will start reflecting in the market capitalization.
That's true. That depends upon the investor, sir. What can we do?
No, sir. You can do a lot. You can create visibility. I think the finance team and CFO, sir, and IR team has to work a lot with the, they have to meet investors, small cap funds, even the PMS, and even, we need to get few research reports to be written by some broking houses. And then eventually that part we need to do something, sir, because IPO price at 300, we are still running at 50-60%, and 5 years down the line, investors being a stakeholder, they are really suffering a lot, sir. So we need to see some visibility of our organization in the market to, make sure that stakeholders are also be happy,
No, we will make some more efforts on this, sir. We will contact our IR and we will ask them to have more investor meetings. And as you rightly said that maybe some research reports could be published. We will have an internal meeting and we will certainly work on this. We are doing at our best here at our production and marketing point of view, but maybe this also needs to be taken care. So we will certainly look into this and make some efforts.
Yes, sir. Because 3 successive quarters of good performance, but still somewhere, market capitalization struggling at very poor levels, sir. So
that's true.
Please, sir, help us out.
Yeah. Sure.
Sure. Thanks.
Thank you. The next question comes from the line of Yogyansh from Mithil Analytics. Please go ahead.
Thanks for the opportunity and congratulations on a good set of numbers, sir. So just a couple of questions. So, in the presentation, we have mentioned and also in the opening remarks about the realizations. So just wanted to get a more sense on the same. How are the realizations trending in domestic and export, if you could share a little more on that?
Realization means margin or the payment received?
The selling price of our molecules, sir. The selling price of, say, Captan, Prosulfocarb, and all of these molecules. How are they trending?
They are very stable. During this quarter 3, our turnover has increased by 31%, and our volume has also increased by 31%. So prices, they are very stable.
So, Gupta ji, is the pricing trend similar in domestic and export, or there is some difference? I mean, what I'm trying to understand is pricing trend getting better in domestic versus export, or the vice versa? Both markets.
We price our product in domestic as well as international market in a band of 3 to 4% only.
So, for example, sir, for export, maybe the price could be slightly lower in the sense that we buy the raw material with duty advance license. So, to that extent, the price in the export market gets slightly adjusted. So, that is the overall situation. But otherwise, from overall working point of view, more or less same.
Got it. And sir, what would be the contribution of the top 5 molecules in our sales on quarter 3 and 9-month basis?
Top 5 will be around 50%. Top 5 molecules.
Okay. And sir, one last question, if I can squeeze in. Any good progress or update on the CRCDMO side of the business that we were working on with couple of clients? I think last con call we had shared that we were in interaction with couple of clients and some site visits were lined up.
Yeah. We are progressing well on this count with our Japanese friend. We already they will be visiting us in the first week of March again, and we are quite hopeful that it will get materialized. Similarly, we are having discussions with the other 2 clients, one in Australia and one in USA, and we have already sent some samples to them. They have approved the samples, so we are looking forward for a more positive feedback from them.
Right, sir. That's it from my side, sir. Thank you and all the very best.
Thank you. Thank you, sir.
Thank you. The next question comes from the line of Lakhan Yadav from Pines Securities. Please go ahead.
Yes, sir. What is the reason for a decline in export revenue quarter on quarter, sir? And which are the best quarters for our exports?
No, export revenue has not declined quarter to quarter. Is it declined?
Yeah.
It has increased from last quarter to this quarter from 75 crore to 96 crore, sir.
No, sequentially. I am talking sequentially.
Sequentially, because last quarter normally second quarter is more. We have normally larger sales in second quarter than in the third quarter. That's why there could be slight adjustment. And again, that depends upon the geography where we are selling. So sometimes customers, they buy in advance. Sometimes they don't buy in advance. They want only in the last minute. That is why there is some fluctuation in the export revenues.
Because in the second quarter it was 140 crores and in this quarter it is 96 crores.
Because the seasonal that again, that's what I'm telling you, sir. It was because of the seasonal effect of some of the products. Because some products, they go more in EU, that goes in the second quarter. And some products, they go more in Australia, they go in third quarter. So EU will be slightly less in third quarter and EU is more in the second quarter. Like that, there is some variation.
Generally, which are the best quarters for the exports, sir?
Sir, again, because we are working in very diversified areas from Japan, Australia to USA, no sir. So it keeps on changing. But normally, second quarter is more on Europe, and third quarter is more on Australia. Third and fourth.
And sir, with the expansion of the service, can we target a turnover of 1,300 crores for the next year?
No, with Salvis and IPL combined, we can have around 20 to 25% increase in the turnover, sir. That's what we are targeting.
And sir, the capacity utilization, you told that it is 65% for the 9 months, right?
It is 65% for quarter 3.
Quarter 3.
3.
Okay. And sir, any new expansion or any new registration in the offing?
No, we have received last quarter about 5 registrations from CIB and 6 registrations overseas in terms of formulations and technical combined.
No,
And
in the
coming months also we will be getting more. They are on the wheel. Already we are working on some 5 batch analysis reports, so that we will be submitting to the next year. We should be able to get at least 7-8 registrations abroad, and similar number we are already having applications pending with CIB Delhi.
And sir, in this quarter, the tax expenses and other expenses has gone up. Are these one-off or are they recurring nature?
These are one-off. The provision include deferred tax and some tax of earlier year. So this is one-off.
No, in the other expenses also they have gone up. So are there one-off in the other expenses?
One of other expenses has increased since our volume has also increased. A lot of expenses, they are directly correlated with production like power, contract labor and job work charges. So they are due to the increase in volume, it has gone up. Only in case of labor employee benefit expenses, due to wage code implementation, there was one of 0.6 crore. In employee benefit expenses.
No, have you added any new technical personnel or R&D team so that the expenses have gone up?
No, we have added few scientists at R&D level also, as well as at the plant level we have recruited the site head there, but there are regular expenses.
And sir, is there an inventory overhang in the domestic market?
Inventory overhang in domestic market है कुछ नहीं है.
For B2C business, there is slightly higher level of inventory, but our B2C business it is only 18 to 20% our total turnover. So we are not impacted much.
Okay, sir. Thank you.
Thank you.
Thank you. The next question comes from the line of Vidisha from CR Kothari & Sons. Please go ahead. Ms. Shah, you may proceed with your question.
Hello, am I audible?
Yes.
Yeah. Please continue.
For this one follow-up question, the roadmap to 3,000 CR, if you could break that up, how much will come from your existing facilities versus how much you're expecting from Hamirpur and the balance 1,000 CR. So can you just break it up?
Madam, what we have worked out is that from Hamirpur we will be getting about 1,000 to 1,100 crores.
Okay.
And from the existing technical, the Sandila and Deva Road unit, we will be getting around 1,500 crores. And then we have B2C segment, that is our branded sale, which we expect to be around 500 crores.
Okay, sir. And you expect all of this by FY28-29?
No, we expect it by March 31.
Okay, March. All right.
Yeah.
And what kind of margins do you expect then?
Margin, we will be trying to keep in the same range, at least 18 to 20%.
All right. 18 to 20% including other income, right?
Pardon? Including other income?
Yes.
But that our CFO will be able to tell much better.
Actually, our other income includes forex gains also, which is normal in nature. So other income by way of interest is only 1 crore per quarter. Other component of other income is normal in nature, that is gain by foreign exchange, foreign exchange gain on sales.
All right. That is helpful. Thank you and all the best to you, sir.
Thank you.
Thank you. The next question comes from the line of Vishwinder Singh from Prudent Equity. Please go ahead.
Hi, sir. Just wanted to confirm on the capex on Chandela part that you mentioned 25 to 30 crore for FY27. So would it be mainly for technical or both, like technical plus
It will be there. What we have planned is one technical plant and small some expansion in bulk formulation activity.
Okay.
Because nowadays many of our customers, they are requesting to give us bulk formulated product rather than technical. So we are creating a facility for bulk formulation.
Okay. So like when can we expect a concrete plan for the expansion and the capacity that to be added?
This maybe by next month we will work out the exact component on these.
Okay. And for the Chalvis capex, can we expect similar kind of timeline for concrete data?
Yeah. In March we will finalize. By March we will finalize everything because we have to get the board's approval also for this. So in March we will finalize this and then get the board approval.
Okay, sir. That will go. Thank you.
Thank you. The next question comes from the line of Manish Badane from 361 Capital. Please go ahead.
So in third quarter, one second. In the third quarter, we have any sort of government incentive, like from the state government or something like that we have reported in the third quarter?
Government incentive? Did we get anything? Government incentive?
Government incentive.
No. We are targeting this in government incentive in Salvage Specialties Limited, but it will be accrue to the company after it start production in next year. Some letter will be received by them Salvage Specialty.
Okay, and this expected amount is like 8 to 10% of the cost of plant and machinery, right?
No. Cost of plant and machinery is not
incentive will be in the percentage of plant and machinery, certain percentage.
Yes, exactly. That is what I am saying.
It will be spread over 10 years after completion of first phase.
Okay. Got it. Thanks.
Thank you. The next question comes from the line of Diya from Sapphire Capital. Please go ahead.
Hi, sir. Am I audible?
Yes, ma'am.
Yeah, madam.
So are we sticking to the FY27 guidance, or do you think we can expect some revision?
Pardon, could you please repeat?
Are we sticking to the FY27 guidance for revenue and EBITDA margin?
Revenue guidance for FY27 this year.
Next
year. We can expect about 20% growth over this year, madam.
Okay, so and for the margin?
Margin also will be in the similar range, 18 to 20.
All right, sir. Thank you.
Thank you. The next question comes from the line of Ishwinder Singh from Prudent Equity. Please go ahead.
I sir just wanted a confirmation. Are we doing any B2C currently or all B2B segment is there?
No, we are doing B2C also, sir. B2C is around 20% of our overall revenues. We are doing B2C for the last so many years and having more or less similar ratio of B2C and B2B.
Okay, sir. Okay. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Thank you everyone for your participation. For any further queries or clarifications, please do get in touch with our investor relation team. Thank you very much. Have a nice day.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.